Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. We will begin with markets as usual. To my left is my colleague Suyash Maheshwari.
Hi, Shweta.
Suyash, run us through how market performed. Some stocks were at an all-time high.
A lot of
stocks at 52-week high for that matter.
Definitely, Shweta. It was a very interesting morning for the markets. Indian markets opened with strong gains and Nifty was trading above 19,500. Now, after the strong opening, both benchmarks were seen pairing their gains and were trading almost flat by mid-morning. But then we saw renewed buying interest due to which Nifty was able to scale back the 19,500 levels and close almost 0.5% higher in today's trade. Now, if you can see, Nifty 50 was up 0.48% and closed above the 19,528 mark, whereas Sensex was up 0.37% above the 65,600 levels. Mid-cap and the small-cap indices continued to outperform the broader markets. Nifty Mid-Cap 100 was up almost 1% and Nifty Small-Cap Index was up almost 1.3%.
All right, let's also quickly take a look at some of the stocks that were in action this afternoon.
Yes, so among the top gainers, Shweta, was Coal India. Coal India surged more than 4.5%. Now, this was because the production in August surged by as much as 13%. Now, Wipro and HCL Tech were also among the gainers. Now, this was on the back of a broader rally in the IT pack. Ultratech Cement and Jio Financial Services was also among the top gainers. The both stocks surged over 3%. If we look at the losers in today's trade, Mahindra and Mahindra saw some profit booking at higher levels. It was down about 1%. Nestle India was also down about 1%. ITC, Axis Bank, both the stocks which have been in focus lately saw some profit booking in today's session and were down about 1%. Bajaj Finance also paired some gains and was down about 0.58%.
All right. Quickly, Suyash, I want you to run us through some of the key performing sectors. I think railway stocks in particular were in focus this afternoon. Stocks closed, especially for the Railway Finance Corporation. The stock closed almost 20%.
Yes, so IRFC actually has been a really a story that has surprised the market participants. In the last two sessions, Shweta, the stock has surged over 30% and year to date the stock has turned multi-bagger, surging about 103% in 2023. In the last 12 months, Shweta, the stock has surged about 200%. Now, what's more intriguing is what's
driving this rally in the IRFC stock?
Actually, we are seeing a rally across the board in most railway stocks as we are seeing a recovery in economic activity.
Absolutely.
And also there is a plan from the Railway Ministry which is pushing for which is seeking a cabinet approval for 5.25 lakh crore plan which would focus on improving the railway connectivity. So this means that all these companies will get better orders, which as a result these stocks have been in focus. Now, IRFC, IRCTC, RVNL, all of them were trading with solid gains in today's session, and several of these stocks touched a 52-week high. As I was talking about IRFC, it now is the most valuable railway company in the listed company. It has a market cap of over 86,000 crore, which far exceeds IRCTC, RVNL, Concur and other railway companies.
Right. And before we go to metal stocks, because they were in action as well, let's also understand what's happening with IT stocks. Outperformers once again. Strangely, not on the back of any major trigger.
So, Shweta, the IT pack has emerged as somewhat of a contrarian bet for the market. Now, the IT pack, as we saw, the results were highly unimpressive, and the guidance even coming out from the companies did not really, give any sort of confidence for the investors. As a result, the stocks were trading with significant declines, and if you could see the Nifty IT pack, Nifty IT pack was up about 4% in August. Now, in entire 2023, the sector has been a laggard, and I think we are seeing somewhat of a bottom fishing in the sector.
All right, and metal stocks, do we have an update there, because metal stocks were also trading in the green today?
So, metal stocks, Shweta, are seeing a bit of a bull run. Now, in the last 4 out of 5 sessions, the stocks, the Nifty, the metal pack has posted gains. And on a weekly basis, the Nifty metal index is up about 7%. And even today, several stocks surged to a 52-week high. As a result of this, Nifty metal surged to an all-time high levels. Now, if we look at individual stocks, Tata Steel surged about 4%. It touched a 52-week high of about 132.9 rupees. JSW, SAIL, NMDC. Now, several stocks in the Nifty pack touched a 52-week high. In fact, all of the 15 stocks, 14 were trading with positive gains, and 9 out of the 15 constituent stocks touched their 52-week high in today's trade.
All right, and finally, I think let's also, before we move to our expert, let's also perhaps talk about Jio Financial stock. Stock has been in focus. It's out of Sensex now, which essentially means that the stock in fact closed marginally up, as opposed to up about 3.39%, as opposed to trading throughout the day, in fact, in the 6 to 7% range.
The stock in fact rallied as much as 8% in today's trade, Shweta.
Okay.
So on September 1, Jio Financial Services, as we know, was removed from the Sensex, and as a result of this, the expectation of index or passive funds selling the stock the index fund selling the stock has finally subsided. Now this index, as also the circuit limits have been revised on the index. Instead of Jio Financial Service had a upper and a lower circuit of about 5%, it has been raised to 20%. What we are seeing is that several block deals have helped the stock gain traction, and even today it was above the listing price.
All right, so above the listing price there, as far as Jio Financials is concerned. We will of course talk in great details about these stocks. We are hoping an expert will join us very, very shortly. But coming back to IT stocks in focus, because we were discussing right before the show started, no major triggers there, but it appears that the hike that many IT companies are expected to give in the next appraisal cycle will not come through, essentially meaning that there will be no hikes for a lot of IT professionals. On the back of that news, IT stocks seem to be, performing really well. So that news has in fact augured well for investors, perhaps means a better bottom line for many of these companies, including TCS, Wipro. A
better bottom line because, of course, the fixed cost component comes down. The fixed cost component comes down, and at the time when the order book pipeline is not as strong as the companies were expecting, and we are seeing a deferred discretionary spending from the BFSI segment, which is one of the biggest sectors that biggest clienteles of these tech companies. So there was some expectation of a lower top line, but the fact that their bottom line, because there will be no salary hikes, their bottom line will also not exceed. Okay. As a result, the profitability is not expected to take much of a hit. Maybe that's why we are seeing some bottom fishing in IT stocks. All right,
Vijay Chopra, who's the MD and CEO of Enoch Ventures, joining us on the broadcast. Vijay, thanks very much for taking time out, sir. I want to first begin by asking you, what explains the massive sea of green in the stock markets today? IT stocks, metal stocks, PSU stocks, all at an all-time high, some of them at a 52-week high.
I think that Nifty, the indices in the markets were quite in a consolidation mode since number of days. And we are seeing that there's a huge outperformance in the mid cap and the small cap space. Although we haven't seen the large caps moving that much, but today we saw some action in the IT companies, and in the capital goods space, BHEL showed some promise, and IT companies showed some promise. So I think that the companies which have either a very good order book. I was talking on some other channel today, and I was just mentioning, you look at a company like RVNL, which has a market capitalization of 35,000 crores and has an order book of close to 65,000 crores. So the order book is humongous, whether it's defense companies or capital goods companies or railway companies, and we are seeing outperformance in all these sectors. Defense and railway especially have been some of the most rewarding sectors in the last 6-7 months. So I think that this exuberance is also not natural in the markets. So I would say that it's a time that we should keep on booking profits. So it's very important that in such kind of bull runs, you should keep on booking profits from time to time, and from an overvalued stock you should try to get into a undervalued story. So no point of being a part of this unnatural exuberance, because it's not natural that stocks hit upper circuits, or are 10, 15, 12% every day, which you see. We've seen railway stocks working like that. So it's a good time to start booking profits in defense and railways, and start moving to maybe large cap IT, which looks good, cement, which looks good, and sugar stocks, which look good, food related stories, which look good, restaurant stories, and select hotels, which I like.
All right. So essentially, many of them stocks, cement to railways to a lot of infra stocks there.
But Shweta, before we get into sectors and stocks, I want to understand what Vijay, your broader outlook on the Nifty, on the headliners or the blue chip stocks are, because I think 19,500 was seen as a crucial resistance level for the Nifty index. It closed above it. So can we expect some sort of a trend reversal, or do you still see that the bearish sentiment is still intact?
Well, if you see last few months, markets have been consolidating, and we've seen a very steady oscillation between 18,400 and 19,500, 19,600. I think indices are not moving much because the heavyweights as such are not doing anything. If you look at companies like Reliance or ITC or Hindustan Lever, all these companies have not been doing much, and especially IT also, the likes of TCS, HCL, they haven't moved much. That's why we do not see much action in the indices. But yes, as I said, that there is unnatural exuberance in some of the mid cap and the small cap stories. So I think that the indices are going to be somewhere around here as well. So I don't see markets, breaking new highs, 19,800, 19,900. I don't think that, markets are going to break that anytime soon. But yes, we are going to have pockets of excellence, and we need to ride the tide and keep on booking profits. Mind you, keep on booking profits. There might be some kind of a bad news, and we see, Nifty 300 points down one fine morning, and, all the Australian and the Japanese indices open down, and, then people fall into a panic. So no need to get into a panic. I would recommend all the investors to keep on booking profits. So once you have 10, 20, 25% in your pocket, so get into a undervalued story, and the stocks which have gone up considerably, you should book profits.
All right. Sorry, before my friend Suyash comes in, I also want to, Vijay, quickly understand from you which are these undervalued stocks that are in focus at this point in time. Or sectors rather. Which are your big bets?
Well, I think I've mentioned that IT companies, TCS, Infosys, Wipro, HCL Tech, these look very good to me. I think ITC one can look at these levels. So ITC is also one company which you can bet on. Apart from this, I think that ACC, especially in cement, I like in the large cap space. Adani Ports is one company which and one business which I like in the entire Adani pack, apart from ACC. So there are good sectors. Infra, of course, there are if at all you find L&T as a stock in a correction, L&T also looks good. Banking, I think that SBI should be the best pick at this point of time. SBI looks very good, and apart from that, in the private sector banking, I think HDFC looks very good. So, and yes, Coal India, of course, Coal India also looks good with 2 to 3 months perspective.
So infrastructure sectors, I mean, the government's capital expenditure did pick up in there was a front load of capex. Now we expect that because of the elections coming up next year, the expenditure is only going to increase. So maybe that is a theme that we can investors can look at.
My dear, expenditure is already there. You have 10 lakh crores of expenditure outlay which was there in the budget. So till now, once it was announced, we had summers. I think that the infra work doesn't happen much in summers. Then came the monsoon. Monsoon definitely puts roadblock in all these activities. So the best season for all the infra work is from September to maybe March, April, and we are going to see that. Now when you have the expense outlay already there, according budgeted outlay, I would say. Then there is, implementation. And yes, due to the election year, we're going to see implementation. I don't think that there's going to be further push for some further budgeted allowances for the infra space. They're already there. They have to be implemented. And once this start getting implemented, I think the metal sector, so to say, should do well. The cement sector should do well, and so should be should the capital goods sector. So we saw what happened to BHEL, BHEL. So I think that this is time for implementation, and the government has to do it in a jiffy because we have the election just around the corner. They have to showcase something that whatever they have spoken in the budget, they are trying to make it happen, and people are going to witness a large infrastructure budget which was given. Now they're going to see the implementation. We are already seeing a lot of things happening in the railways. The railways also had a fairly large 2 lakh crore budget as far as the infra goes. So the likes of Titagarh wagons and Jupiter wagons, and the metro rail related stories, and all the railway related stories have started moving up, just because now is the time for implementation, and we are going to see a lot of things getting implemented in the next 6 months, and the government is going to showcase it for the 24 elections.
So, one final question from me. Jio Financial Services has been excluded from the Sensex index, and it seems that the index selling or selling from the passive funds will finally slow down. What's your outlook on the company and the stock?
Well, I think that the company hasn't even started as of now. And I think that last week also you asked me the same question. I know Mukesh Bhai's style of working, and it would be definitely a splash, and they're going to come up with verticals, they're going to come up with, an AMC, an NBFC, and, maybe some kind of a broking outfit, and whatever you can think of in financial services, Jio is going to offer. So I think that these are good levels to latch on to Jio Finance at these levels. And if somebody has a longer term perspective, maybe 3 to 5 years, the stock can even double up from here. So I am fairly bullish on Jio Financial, and it's definitely going to unsettle a lot of settled players.
Okay. In your experience, the kind of volatility that Jio Financial stock has seen, even before it actually launches its business plan and perhaps makes people and investors aware of what business it will operate in and how many businesses it will operate in, how much the kind of volatility, has it ever been mirrored in any other stock in your experience?
Well, I think that Reliance is an over-owned stock. We have to understand, even before I think you were born, I think that before I was born, Reliance was listed.
Okay.
Reliance was listed after I was born. It's an over-owned stock. Every household has anybody who's invested in the markets. They are long-term buyers for Reliance. So there's a bonus share which came. People started booking or dumping, and maybe there are certain funds, offshore funds, domestic funds. They just wanted to get some profits off the table. So that was the reason we saw some selling. But again, at 202 levels, we saw that Motilal Oswal came up, and there were other funds which lapped onto the stock. And I think that the way it has moved in the last 1 week from 202 to almost 260 odd levels, it has been a stupendous move. So I won't be surprised that the stock is trading at 400, 450 very, very soon, once the businesses and the business models are discussed in public. So as of now, it is more or less, the picture is clear, but the entire thing, the fine print is not very clear. So BlackRock is coming with them. This is evident that they're going to come up with an AMC. They have a fund backing. Definitely, they're going to come up with an NBFC. They might launch their broking outfit, and maybe something for institutional equities, and maybe for foreign funds to work in. We already have GIFT Nifty in place, so who knows what all plans they're going to come up with. But whatever they are going to come up with is going to be fairly big, and it's going to unsettle a lot of settled players, as I said earlier.
Absolutely, fairly big and keenly watched. Jio Financial stock there hitting once again a high this afternoon. Vijay Chopra, thanks very much for taking time out and for joining here on News 9. We look forward to having you back again. And Suyash as well. Thank you very much, Suyash. And shifting focus now, August car sales data is out. Ahead of the festive season, Indian automakers have posted an increase in passenger and commercial vehicle sales for August. Joining in is my colleague Krishna Kumar to run us through the numbers. Krishna, explain to us the numbers at an all-time high there, at least for Maruti Suzuki, as we discussed this morning.
We do have a Honda Elevate over here in the picture. We will talk about Honda Elevate a little later because that is the launch from Honda as far as the SUV space is concerned. We begin with the auto numbers. We talk about the big auto players in the Indian market. We have Maruti Suzuki, we have Hyundai, we have M&M, and we have Tata Motors. Across the board, if you see, there has been an uptick in sales from Maruti, M&M. Only Tata Motors, for just of the headlines, Shweta, only Tata Motors seems to have a drop in passenger vehicle sales of around 3.5%. But whereas you take up, and even Tata Motors, if you see, it had great export numbers, zooming as far as Tata Motors is concerned. But overall, the passenger vehicle sales for Tata Motors in India was down 3.5% from 47,166 to 45,513, and this is for the month of August 2023 compared to the month of August 2022. So it's a year-on-year comparison where the numbers are a little down as far as Tata Motors is concerned. But the headline as far as Tata Motors, Shweta, incidentally, is electric vehicle sales. Electric vehicle sales for Tata Motors up 55%. If you look at it, wow, this is the sales for Tata Motors broken down in terms of simple numbers. 1,517 cars daily being sold, 63 cars being sold every hour, and just about one car every minute as far as Tata Motors is concerned. But the real headlines, Shweta, is the electric vehicle sales. You have Tata Tiago, Tata Tigor, Tata Nexo. Electric vehicle sales are up 55%. Exports are up 125% as well, from just 185 units in the month of August last year to 420 units in the month of August this year. So Tata Motors' exports doing really well. So good shot in the arm for India's Make in India is concerned. Tata Motors EV sales has been talking about up 55%. Nexon, Tiago and Tigor are the EV models from Tata Motors stables. Clearly, they are up and coming, up and rising. As far as India is concerned, a majority of Indian car passengers will be, who are EV passengers, will be driving Nexon, Tiago and Tigor. Let's move on to the other big automakers in the country. We have M&M and Hyundai and also Maruti as well. If you can pull up the what we have over here. We have
M&M here.
Numbers, and we have
M&M here.
We have M&M numbers over here. August 37,270, up 26% as far as August domestic sales. All of these sales, Shweta, bear in mind, are for the month of August in the sales in India is concerned. So M&M also posting the highest ever SUV sales. There you go, 1,200 odd cars being sold by M&M daily on average, 52 cars every hour, and just a little less than one car every minute being sold by M&M. As far as M&M's car sales is concerned, the big headline from the month of August was the fact that it was one of the highest ever SUV sales it has posted, which means all Mahindra cars, SUVs, your Thar, XUV 700, XUV 300, Scorpio, all the Scorpio variants and the Bolero, all of them are doing extremely well and posting their highest sales for a particular month. That's what M&M is doing. And let's move on to other car makers that we're talking about, because Shweta, we're only discussing the passenger cars over here. We're not talking about M&M's tractors and other commercial vehicles it sells. There you go. This is the total number. This includes exports as well. The overall sales being up 19%, Shweta, to over 70,000 units being sold, that compared to less than 60,000 units being sold in the month of August last year. So this is M&M's broad picture. So both domestic sales are up and rising, and exports too showing an uptick. So put together, overall, more than 70,000 units from M&M's stable. There you go, Hyundai over there, a growth of little less than 9% to around 50,800 units being sold from Hyundai India. Bear in mind, this is Hyundai India Automotive Limited, HIAL. So this is the domestic sales from Hyundai India's unit. The overall sales is a different number. But there you go, Hyundai posting 8.7% growth from just about 49,500 units in the same month last year. That's around 1,794 cars being sold every day, around 75 cars every hour. and around 1.25 cars every minute. So more than one car per minute being sold by Hyundai's India unit, the South Korean car maker, who's been in the country for more than 3 decades now, continuing with its robust run in the India market. This is the Hyundai sales equation. Domestic sales up by 8.7% and exports up 38.5%. So that's also on the rise. So both Hyundai and M&M, even as the domestic sales increase, their exports are also zooming up considerably. So Shweta, great shot in the arm for Make in India cars for sure. Hyundai India, imagine a giant like Hyundai, a South Korean giant, now majorly exporting from its India units to over 17,600 units being exported from Hyundai India's manufacturing plant to across the world. So overall, if you see, Shweta, the numbers for the month of August is definitely showing an uptick as compared to August last year, and we are, after all, at the threshold of the festive season. So let's also quickly, before we wrap things up, also talk about Hyundai's, what is going to happen for Hyundai, which is its Exters and its Creta. If you see, all car companies moving in the SUV direction, SUVs continuing to do well, electric vehicles continue to do well, whichever company has done enough, like Tata Motors. So that's the overall picture. All those of you who've got your extra bookings, you might have to wait longer than you think because that's the kind of booking, 65,000 plus bookings already for the extra. And there you go, finally, the largest car maker in the country, Maruti Suzuki, up 14.5% to nearly 2 lakh units being sold, Shweta. What is India driving? If you ask that question, you go back to that question. India drives Maruti mostly. The numbers, really tell the picture. More than 5,300 cars being sold every single day at Maruti dealerships across the country. More than 220 cars being sold every hour. Look at those numbers. 3.68 cars. More than 3.5 cars being sold, Shweta, every minute. That should tell you. And we're talking about the growth of SUV, Shweta. There you go, the mini segment of Maruti. All of them, Alto, Espresso, Ignis, all your small cars in Maruti stable, witnessing a 45% drop from 22,000 units in August 2022 to just about 12,000 units this August. And compact segment has been flat. The van segment has also been flat. So again, the question, what is India driving? India is driving SUVs of different shapes and sizes. The compact SUV, mid-size, there you go, mid-size sedan, CR sales down 44%. There's evidence after evidence that people are not buying sedans, people are not buying small cars, people are not buying vans too much. Utility vehicles, 118%. What is utility vehicles? We're talking about your SUVs and even your MUVs that Maruti launches. Right. So all the UVs, especially the SUVs, are literally the order of the day. They're not the headline, they're just the order of the day.
Okay, I just wonder whether we have those kind of roads in India for people to be buying these many SUVs.
Oh, sure, that's counterintuitive. You want the SUVs because it comes with those bigger wheels, with better shock absorption as well. So to deal with the Indian roads. So this is the average Indian counting for bad roads and buying cars that can deal with those bad roads. Right. So clearly, there you go, Brezza, Ertiga, Fronx, Grand Vitara, Invicto, Jimny, S-Cross, XL6, SUVs and MUVs are literally what India's largest car maker and India's smallest car maker, everybody is selling from across the board. And
since we are on SUV, Honda's Elevate was launched today at a price point of 11 lakh rupees. Run us through those numbers.
Oh, there you go. 10.99 to 15.99 lakh rupees. Honda, bear in mind, has been a laggard as far as the SUV space is concerned. It has all these CRVs and HRVs, but nothing in the proper compact SUV or the 10 lakh, 15 lakh category of SUVs. And hence, with that price point, it will compete with the Hyundai Creta, with the Maruti Suzuki Grand Vitara and the Kia Seltos in that price bracket, so to speak. Bookings did begin in July. But Shweta, the thing is this, whoever booked it in July, they might be having a 6-month waiting period even, or if you are booking it now or in the month of August, you definitely need to witness a 6-month waiting period. So Elevate is Honda's big gambit to break into the SUV market. The reviews so far say the Elevate is good, but nothing outstanding. It's a good car. That's what the reviews that I'm hearing are
I like the price point.
The price point is fantastic. That's probably going to be the biggest selling point as far as the Honda Elevate is concerned. A great product. We'll have to see how much of a dent it can make into the SUV sales of other companies. But here is the deal. Honda has promised to launch another 5 SUVs by the year 2030. So we are looking, this is the beginning of Honda's SUV play, the Elevate. It's elevating its SUV game. We'll have to wait and watch whether consumers elevate the brand in the market and give it a greater share. We have to wait and watch for that.
All right, so big story playing up there in the Indian auto space, where SUVs are definitely the new game, where we are not just looking at 1 or 2 or 3 more SUVs, but we're looking at a host of SUVs being launched, and not just any SUVs. In fact, electric vehicle, which is again going to be, Krishna, one of the big impetus, not just from Tata, but also from Mahindra, hopefully from Honda as well. Electric vehicles is going to be the big game, an electric vehicle powered SUVs that are not running anymore on ICE engines, perhaps are running on batteries and on sustainable fuel. That is going to be closely watched at.
We are waiting. We have now arrived at the size and the dimension. The size and the dimension is roughly a compact SUV or a mid-size SUV is what Indians like. That's the size that they like. And hence, today, if you see, as far as the SUV market, the normal SUV market is concerned, 48% of sales in India, car sales in India, come from SUVs. And you're talking about this at a time when a diesel SUV maker like Mahindra has launched the electric version of their iconic Thar. So every single iconic SUV is going to start having its electric variant, and the sales of that, how well you can push those sales will be something that every automaker is keeping their eyes on. You have even MG Motors, one of the smallest automakers in the country, auto sales in the country, even that has, amongst its very small portfolio of products, has an SUV which is an electric car. So electric car variants you will definitely see being added. Tata, for instance, has 3. Nexon is a top-selling mid-compact SUV, which is an EV as well. So there are certain models which have already connected well, have already done good sales. Now it's about the rest picking up. Like Honda has just entered the SUV race and is promising to launch an Honda Elevate electric version as well. We'll have to first see how well the normal SUV does, and then we'll talk about how well the electric version of the Honda Elevate does.
So the fast moving cars perhaps have become the SUVs, and people are choosing very, very quickly. Their tastes are changing very, very quickly, going for, of course, more sustainable models at a very fast clip. We'll, of course, keep tracking all those data points and data numbers that are announced monthly, as a matter of fact. But staying on with Krishna on an important story and shifting gears rather, the State Bank of India has announced the implementation of UPI interoperability in its Digital Rupee or E-Rupee, also called the central bank digital currency. Now, QR code interoperability allows frictionless transactions between customers and merchants when accepting payments via UPI or digital wallets. Shops will be able to display only one QR code. It will make it easier to use the Digital Rupee in daily transactions. So you can use the same QR code for UPI transaction as well as E-Rupee transaction. Now remember, HDFC Bank was the first bank to make interoperable QR codes available to merchants and their consumers, followed by Canara Bank, Axis Bank and Yes Bank. SBI now seem to have joined the bandwagon finally. What is E-Rupee? What is the hullabaloo around E-Rupee? Why is it important, and how is it going to change the digital landscape in India? For all that and more, let's watch that documentary.
साथियों, आज के अखबारों में सेंट्रल बैंक डिजिटल करेंसी की भी काफी चर्चा है। इससे डिजिटल इकोनॉमी को बहुत बल मिलेगा।
Introduction of a central bank digital currency will give a big boost to digital economy.
डिजिटल पेमेंट, ऑनलाइन पेमेंट, रिटेल पेमेंट ज्यादा सुरक्षित होगा, रिस्क फ्री होगा। इससे कैश को प्रिंट करने, हैंडल करने, डिस्ट्रीब्यूट करने में जो बोझ पड़ता है वो भी कम होगा।
E-Rupee is digital rupee. Quite simply put, it's India's own digital currency. Just like you have your currency notes which you can hold in your hands physically, this one you can hold the E-Rupee in a digital form, in a virtual form, in a wallet online. The E-Rupee is essentially India's CBDC or Central Bank Digital Currency. The Reserve Bank of India, India's central bank, launched the E-Rupee officially on the 1st of December 2022. And since then, the E-Rupee is being tried out in a pilot by a few traders and a few individuals in the country. And as of now, there are about 16.5 crore rupees worth of E-Rupees available, which is less than 0.0001% of all the currency notes of rupees that's available in the country.
You don't print, and creating a digital currency is no cost. Absolutely no cost. It is like you and I creating a painting on a computer. Right, so it's no cost. It goes into your routine IT computer links that you maintain or Wi-Fi you maintain, so it will go like that. It saves a lot of hassles to RBI. It saves the fake currency issue also, because if there is no print, there is no fake currency. It's all digital.
Around 130 countries across the world, which account for 98% of the world's GDP, are all developing their own CBDC or central bank digital currency. 19 of the G20 countries are in advanced stages of launching their CBDC. Including India, 11 countries across the world have already launched their own digital currency pilots. And all of them have happened at the same time as we've seen the rise of cryptocurrency. But there are fundamental differences between a cryptocurrency and a central bank digital currency, although both of them are digital assets.
Now CBDC is not crypto. A lot of people confuse with it, because crypto is a virtual digital asset. Asset means what? I buy a crypto of 100 rupees. Its value is not backed by anything. Its value is based on the trade, how the trade happens, and more so in crypto, different from the other asset class like mutual fund or shares. So it is not only the trade but also the innovations which happen, the net innovations on Web3 which adds value to this crypto. So the crypto value may become 200 of 100 rupees or may sort of slump down to 50 rupees or 10 rupees. So that is a risk factor on which the crypto works. But if you look at CBDC, it's like a printed rupee note, legal tender in your wallet. So it is a digital legal tender and therefore called E-Rupee. And you buy that. So 100 rupees will remain 100 rupees today, tomorrow, 50 years down the line. Right? So nothing is going to happen to it. It's neither going to grow or reduce.
In case of cryptocurrency, it is issued using the blockchain. It is an open big book which is open for everybody to read if one tries to do that. Whereas in case of e-currency, which is issued by Reserve Bank of India, proposed to be issued, already pilots are going on, or by any central bank, the information is not available for public reading. Of course, it will be available with the issuing central bank, but not for the public reading. Any central bank in the world would be concerned about the nature of cryptocurrency, how it can operate, what use it can be put to, and probably apart from the ease of transacting and so many other things, cost included, but I think that is probably the most dominant factor weighing in the minds of central bank to offer public something which is digital currency but which is not carrying this kind of risk.
The Reserve Bank of India launched the E-Rupee pilots in partnership with a collection of a few banks in the country who chose to take part in these trials. While the E-Rupee does come with certain advantages, so far the offtake has been low because of all the uncertainties attached with a digital currency.
Why currency is used by the people? Why people prefer to use currency? Because of the two features, and those two features are ease of transacting and anonymity. Now, in case of digital currency, while the ease of transacting could eventually materialize, as I said, connectivity etc. could be some issue, but ultimately at one point of time they will be all taken care of. So that will be taken care of, but to convince the user about the anonymity, there would still be a challenge, because unlike crypto, while it will not be an open book, but again these all transactions would be recorded in the central bank's book. So in that sense is not exactly what a paper currency is, where it is a trail is completely anonymous. So I think that will be a challenge.
With UPI exploding beyond anyone's expectations, questions now remain on the actual usability and the use case for an e-rupee. In how many instances will the e-rupee be more advantageous to use than UPI, which helps you conduct digital transactions either way?
There is no future for CBDC in the retail market. Because I'll tell you the drawbacks of the CBDC. CBDC does not earn interest. Like I told you, your 100 rupees remain 100 rupees. Whereas in digital UPI payments, whether I'm doing it through RTGS or NEFT or through mobile or through a wallet, till I pay, I'm earning interest on it. So nothing is going to happen to it, right? Then when I pay to somebody, A pays to B, the B starts getting interest on it in their saving accounts the moment it enters their account. It's only the current account there is no interest, otherwise there is an interest. One. Number two, you can pay to the last unit. So if you have to pay 97 rupees 23 paisa, you can do that. Whereas in CBDC, you will have to buy a 100 rupee note or 50 rupee note, then 10 rupee, 10 rupee, 10 rupee, 10 rupee, 4 note, and then you have to round off to the highest, because there is nothing like 3 rupee note, or buy 1 rupee note, and that paisa then again you will have to do. So every time you will have to download that kind of a digital currency by again paying digitally. So you pay digitally to RBI, download CBDC, then pay to B, and then the B also either keeps it as it is or converts into digital money. So instead of doing that, you can digitally directly pay from A to B through UPI. Absolutely. And with a minimal cost. Practical usages have a limitation as on date, because we have a great option of digital payment wholesale through RTGS, IMPS, NIFT, where all financial institutions and now even post office and cooperative banks, they have digitized, are all linked. So there is no problem. And similarly, the retail is completely linked. There is no problem.
My personal sense is it would be easy to navigate on the part of wholesale, which will be between the institutional players which have a robust technology, robust connectivity system, robust risk management, and probably there it can move with much greater speed than on the retail side.
It can be a much more efficient system. Today when you do a transaction, suppose you pay me through UPI, payment first goes to your bank accounts get debited, then it comes to my bank account. So it's a very complicated process. There is NPCI in between. So depending upon the design, it all depends upon the design also. If it is really e-rupee which is in offline mode, where at the time of transaction banks are not involved, then it can be a very efficient and cost-effective system. The only pitfall is that if system doesn't work even for, say, if there is a disruption for 30 minutes, what will you do? Imagine you are cashless and there is, for some reason, there is a disruption. What will people do?
All right, let me first begin by congratulating you, Krishna, on that brilliant documentary. E-Rupee is going to be the future, as many would like to say. It is a part of India's own digital prowess. India launching, and various platforms and various banks, of course, now launching and getting on the E-Rupee bandwagon by making it easier for customers, for people to transact. But in essence, for those who do not know the difference between what is UPI and what is E-Rupee, what would you like to tell those people?
First, they should go watch the documentary on News 9 Plus, which is India and the world's first OTT platform. That's what that entire documentary was about. We've gone into great depths to tell you the differences between a cryptocurrency and a CBDC. So my first words would be like if somebody asked me, what's the documentary? Okay. So if not, there is many ways of interpreting it, because both of them fundamentally, Shweta, are based on blockchain technology and Web3 and blockchain technology. And they're both digital currencies. What essentially is happening with something like CBDC is CBDC has been launched in a pilot way for the last over 2 years by many countries. You have the US, you have China, you have 11 countries across the world, including India, have launched CBDC pilots because of the rise of cryptocurrency. Why? Because CBDC comes from a government and a central bank. There is no price volatility in it. At the same time, you can't trade with it. So it remains a digital currency, a digital version of a country's normal currency. So the only difference is that when your normal currency stays in your bank account, it will earn interest. But when that digital currency stays in that online wallet, it doesn't earn any interest. Right. And plus, you can't trade like crypto. So hence,
but it does every other work.
Yes.
And with banks making it now more and more practical and feasible to use E-Rupee. I'm not sure if you have an E-Rupee wallet just as yet. I don't have one.
So
but hopefully
Shweta,
there'll be more uptake.
way it works is that right now E-Rupee retail, which is for common people, is not available. It is available only through pilots where the banks who
are making it available,
are in fact sending individual invites to certain people of say certain bank account levels probably. And so because we've seen some social media influencers, fintech influencers specifically, who've been posting videos about how they got an invite from a particular bank and then they went and signed up, they downloaded E-Rupees into their wallet, and etc. etc. So for all those watching, you're not missing out. There is no E-Rupee available to any one of us. It is being introduced in a pilot way by banks to certain select customers who they've selected. So,
if you're one of those customers, perhaps write to us. You can leave a comment at the bottom of this video. We would love to hear from you and love to hear your experience about E-Rupee. But for all the rest, you can go and watch that documentary on News 9 Plus. And with that, it's a wrap on this bulletin. Thanks for watching.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.
China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies, streaming now.
Imagine an airline going down.
This is not just a Go Air or an Indigo or even Air India issue. This is a global aviation issue.
Flight tickets are going as high as 2x, 3x, 4x, 5x.
How I see it is that I see some bit of capital infusion probably coming in. Some bit of bailouts probably.
Where we are today, I think it's not just bumpy, but the turbulence is severe.
It's a very